Hello, everybody. Thank you for joining us. We're just going to wait a couple minutes here so we can get some people that are on their way. Hope everybody's having a good day. Just another minute or so. Okay, well, I will get started with introductions. So thank you again for joining us. My name is Coley Curtis. I work at University Credit Union. I'm located in San Diego for the most part at UC San Diego. And I'll let my partner introduce herself.
Good afternoon. My name is Sheena Barlow, and I am the growth officer at Pepperdine. I'm looking forward to our financial wellness on steering your finances, but I'm going to turn it back over to Coley. I'm excited.
Thank you, Sheena. Me too. Yeah, we get a lot of questions about auto loans and a lot of questions about refinancing, especially now that lending rates have started to kind of go down in the last year. We do have the comments turned off. However, I do want you to feel free to use the Q&A feature during our presentation. We've got Cheryl, who is monitoring that for us, and we're going to try to get to everybody's question by the end of our time together. But if we do run over and run short on time, we will reach out to you with an answer. I promise. And I think for starters, if anybody who is used to buying autos or has ever gone through the loan process wants to put a tip or a trick in the Q&A section for those who maybe are new to the process, I think that would be pretty fun for them. You can impart your wisdom. And then we'll go ahead and get started. So we're going to talk about steering your finances. So a guide to auto buying and refinancing. And we did make an agenda today because we are covering two different topics. So the first auto buying steps, we're going to talk about the budget, securing your financing, research and comparing options, and then finalizing your purchase. And then many of the steps for refinancing are the same, though some are different. So we're going to cover those differences and make sure that you're leaving here feeling empowered at the end. But we'll talk a little bit about what refinancing is, some of the reasons to refinance, when to refinance, and then the process for refinancing. Okay, so our road ahead, like I said, we do want to make sure that you leave here feeling empowered. So what that means is that you're going to have a better understanding of your options and you're going to know what to look for and where to find it. Finally, we just want you to drive away with a vehicle that fits your well-being. So we're not going to feel stressed, we're going to feel informed, and we're going to know that we made the right decision. And some of you are already members. I can see some familiar names in the list here, but some of you who are new to UCU or maybe you don't know as much about us, we are a credit union. So we're a not-for-profit financial cooperative, and we serve the university community and all those folks in it. And so we serve with no conflict of interest. So nobody here makes any commission. We give unbiased advice, even if that means telling you to do something that maybe isn't at University Credit Union. Though we do want you to bank here and we have many benefits, we are a full service financial institution. So at the end, I will invite you to click on a link or rather scan a QR code and you can schedule an appointment for a financial wellness consultation. Or if you had any questions during the presentation, we'd be happy to address those with you one-on-one. All right, and then Tashina with our first step.
Our first step is budgeting. And so when we're going to start the process of buying our car, a budget is so important. But the main benefit of a budget is to be a informed consumer and knowing how much car you can afford upfront is going to help you not only in that moment, but over time. So seeing what you can realistically afford is going to set you up for success in the first step of the auto buying process. So you're wanting to consider some of the upfront costs, which can be your down payment, what your monthly costs will be for your car, but also you're taking into consideration the financing. So what the rate can be and how that's going to impact your payment, insurance, the ongoing costs. So when I think about ongoing costs, immediately what's coming to mind, right, is how much for the car that you're purchasing, what will the fueling be for that monthly, and taking that into consideration. Your vehicle type and condition. So if you have a new vehicle, you may be looking about things like your additional add-ons that we have coming up in just a moment. But if you have a used vehicle, you might be thinking about long-term, maybe a warranty for your long-term repairs. So adding that all into your budget will allow you to know exactly how much of a car that you can afford. One of the great ways for you to be able to take into consideration your own personal income and what you can afford is the 50-30-20 method. So this method really allows you to break down all your expenses, but we're going to focus on how you can calculate your own car, your payment for your car. So when you're thinking about your transportation, it's about 10 to 15% of your net income. And so you can utilize that amount to know exactly how much car you can afford. And so this can go towards the payments, the insurance. But we'll talk about that a little bit later. So I'm going to pass it back over to Coley. You're on mute, Coley.
Leave it to me. Yeah, I was going to mention too that one of the things I usually recommend for people to do is to go ahead and shop insurance for the vehicle they want to buy. And so that way they can, factor that in and it's actually a real number for them. So our next step is going to be securing financing. So now that you've decided with the help of Sheena or I, or just on your own, how much you want to spend on your transportation per month, we're going to go ahead and we're going to try to get financing for the auto. So a pre-approval is a tool that we like to give our members. It's smart. It gives you leverage when you're negotiating price. It also keeps you grounded. And so when you have your pre-approval and you want to look at that BMW, but maybe you're on more of a Toyota budget, it's really going to help you stay grounded and say, okay, well, I've been approved for this much, so I can't spend over this much. Let's see what's in my price range. Now, what I wanted to illustrate for you too is how important it is to get your credit prepped for the application. And so this is an actual snapshot of the University Credit Union platform that we give to our members, where it will give you a really nice starting point for an idea of what your credit score is. It's also going to show you different ways that you can maybe improve your credit score, right? So it's telling this member their credit's looking good, everything is an A, but if it was not, it would also give you, a way to actually improve that score and maybe short term. So if you wanted to improve your score first, maybe you could wait a little longer to apply for the loan, but we also have a score simulator. So you can put in making payments on time for 6 months or maybe paying down a credit card and see if that will boost your credit score to help you with your credit profile for the overall loan application. Now, this is just our tool, but I do know that a lot of other financial institutions are starting to offer these things. So maybe take a look if you don't bank with University Credit Union today and just see what you can find out on your own. And then another thing that I like to mention, because I think as Americans, we're all pretty obsessed with our credit score. Everybody really wants to know what the score is. But when thinking about your credit score, it's important to understand the things that make that score up. So some people have heard about this, some people may have not heard about this, but this is the only website that a reputable financial institution will tell you about to check your credit for free. One credit reporting agency, there's three of them. You can do them one at a time. You can do them at different times in the year. So I like to do one at the beginning, middle, and end of the year just to make sure that everything looks on the up and up. And so I really recommend going to annualcreditreport.com if you haven't, to go ahead and see if everything on your credit profile is correct, that nothing needs to be disputed, and just, give you a better idea of your overall health there. Now, the fun part, when you have a good credit score, so once you're done working on that score, you have it prepped. The important thing to remember is that the higher your credit score is, the lower your rate's going to be. And so I don't want you to get discouraged if you feel like your credit score is not very good. We can put the application in, see where you're at, and then we will talk about this a bit later, but there's always the option to refinance when you're in a better position. But you can see here the total interest paid, which in my opinion is the most important number in this whole process, goes up quite a bit as that credit interest rate goes up based on that credit score. So I really like to point that out as something to pay attention to, because it could end up costing you a lot of money. All right, now the loan application. Most institutions will let you apply online, but some people like to go in person. At University Credit Union, you can also make a virtual appointment to do your loan application or call and apply over the phone. So, however you like it. And then what to bring to a loan appointment is just a valid ID. So even if your financial institution has already asked for this in the past, it's important for them to check to make sure it's still valid. And so we'll go ahead and request that. And then that can be your driver's license or a government issued ID, such as a passport. Now, proof of income is something that you should be prepared to show. If not at the application, it'll be one of the documents that is requested after you apply. So if you are self-employed, you may be requested to provide 2 years of tax returns. If you are a W-2 employee like I am, they would ask for 1, 2, maybe 3 paycheck stubs. Here at University Credit Union, it's generally 1, but sometimes we will ask for 2, but it's pretty easy to get your hands on that. Now, proof of insurance is another sort of optional upfront, but it does help the process go smoother on the back end. And so if you can get a copy of your insurance card or your policy, just to make sure it's not expired, that's also something to be prepared with. That's a good idea. All right, and then the vehicle information, if applicable. So we're focusing mostly right now on getting a pre-approval, and that would mean that you don't know exactly what vehicle you're going to buy yet. And so when you have that pre-approval letter and it tells you how much you can spend, you replace that with a purchase order, or another document that'll, set that process in stone, because pre-approvals are conditional, right? So we'll talk about the requirements for your vehicle, but once those conditions have been met, everything should be good to go. Here we go, Sheena.
And so once we are in the next step, which is the research and compare, then we get to what I say is the fun part, right? You get to actually look at the car that you're interested in purchasing. So when we're looking at the cars that we're wanting to finance, we want to see if the model is 6 years or newer. That's within the KBB, and right, and then we have 100,000 miles or less, and the vehicle cost does not exceed the value. And so when we're talking about like a newer car, right? So the terms have changed over time, but so when you're looking at your vehicle, you're going to notice that if my car is less than 6 years old, it's going to have a bit fewer miles on it, which actually makes it more desirable for us, the consumer, because it's in a better condition. And these are some of the parameters, the general guidelines that we're looking at as your financial institution. And it's something that you can take into consideration when you're doing your comparison. And then also the vehicle not exceeding the value. And this is a really important step or a guideline, because it allows you to know that if someone's going to sell you the car, if you go on, which I'll mention next, if you go on Kelley Blue Book, that it does not exceed that amount, because if so, that means you're paying more than what the car is actually worth. Now, you might really want that car and it's been a dream car of yours, but you also don't want to be in a space where you've paid more than the value of it. And so some of the resources that are out there for you, and many of these I have utilized myself, with University Credit Union, and other financial institutions, you have Autoland, Auto Smart, and Enterprise Car Sales. And the benefits of going through these entities is that it allows you to do some additional research for your vehicles. They work with other dealerships. So when you're looking to do some of those price comparisons, it's there as well. And you're able to really see with that approval that you've done with Coley, right? You're able to kind of see like where where your dollar is going to stretch the furthest. And just a little insight with Autoland, I have purchased vehicles, at least two, through Autoland. One time my husband had to get a car for unforeseen circumstances. And not only did they help me with the trade in with what was left over, they got the new car, they brought it to me, they let us drive it around, and it was so convenient. And on the flip side, I had to, when I was deciding, like, I had my car, I had it for a while, I didn't have a payment on it, but it was just giving me problem after problem. I went through Enterprise because even though I knew wanted a newer car, it was just the pricing wasn't there for me, and I needed something, but it needed to be in my price range. And I ended up going through Enterprise Car Sales and got my Volkswagen. And both of these services were provided through my credit union, and it made it so convenient. And it helps to take some of that analysis paralysis off the table, right? And put us back in, the driver's seat and be a well-informed consumer and have someone that we know is looking out for our best interest. So those resources are really great and a part of that research process. And so when we are thinking about our cars that we are looking to buy, we're looking at used and we're looking at new and we're looking at also leased right there in the middle. So some of the pros of having a used car would be that you're going to have a lower cost, the slower depreciation of your vehicle. You have lower insurance, and then you have more car for the money, right? So your dollar is going a bit further. Some of the cons that come along with it are the unknown history, a shorter warranty. You have more maintenance fees because it's a little bit older, it needs a little bit more, love and attention. And then also just the features are outdated. You're not getting all that new, I'm saying jazzy, that's dating me. Okay. You're not getting all those features, but you are getting the reassurance that you're staying within the budget, and which is also very important. With the new vehicle, you have the latest technology. You can get a full warranty. Not only can you get a full warranty, you get a manufacturer's warranty, which helps you have peace of mind. You can customize your car the way you want to. So I noticed that I was looking at TikToks and I said, okay, all the girlies have the red car or the red interior, not knowing that that was something that you would be able to customize because I've been a secondhand, girly with my cars. And you're able to, customize it the way that you want to. And that's, and it got that new car smell, but then you also can have better financing rates. When you notice that at the beginning of the year, they are trying to sell all the cars from the previous year. Sometimes you do get a little bit more bang for your buck there when you're looking for that new car. And then you also end up having some cons, right? Those prices for those cars are higher. You have a depreciation that happens as soon as you drive your car off the lot. And then your insurance, you need to have full coverage, right? Like, well, you have full coverage, you're financing your car, but you definitely want to make sure with your newer car that you're having all of your car covered. So, and then any other service warranties also that you're looking to incorporate. But there's also between financing, which we do at University Credit Union, there's also an alternative and it's called leasing. So to lease a vehicle, leasing a vehicle is like a long-term rental. And when you're leasing your vehicle, you pay monthly for the car and it has a set amount of time, which is typically anywhere from 2 to 4 years. And in this time frame, you don't own the car, but you return it at the end of the lease. And then you typically have mileage limits, but this is to make sure that you don't exceed it, because what they're going to do once the car is turned back in, they will end up selling it as a used car. And this makes sure that it can be in the best condition. And at the end, you can either turn your car in or you can buy it. But if you turn it in, you can get a new one, and or you then start the process over again and you're kind of like back here with us and you're looking to purchase either a used or a new vehicle. And but it still gives you some flexibility with where your budget is. So those pros of the lease, you're going to be able to lower your monthly payment. You get to drive a new car. If you decide to stay in that like leasing space, you get to drive a new car for every few years. You get to update that car, right? It's almost like when you get your phones. You're on the plan and you're able to upgrade your phone. Kind of like the lease is somewhere, something like that. You know that you're going to get a new car. You have fewer repairs, and then there's no need to sell it or trade it in. You can just, return it back to the dealer. Now, the downside, so the cons would be you don't own, you don't have ownership of the car, so you don't have equity within the car. And we can talk about what you can do with the equity when we get to the refinancing, right? And then there's mileage limits and fees, and then there's charges for excessive wear and tear on your vehicle. And it could be, for the most part, not even really could, there is going to be an additional cost that if you wanted to end your lease early, that you would have to pay so that you could, you know, terminate that lease. In addition to, when we're looking at and we're doing our research, some of the tools or the resources that you can use are Kelley Blue Book, the National Automobile Dealers Association, which is the NADA. So the Kelley Blue Book and the NADA, what they're doing is they're providing you with the actual value of your vehicle. So it's letting you know if it's new, used, and in what condition, what is the value. So what is the MSRP, right? How much is your car actually worth? It's going to give you the trade-in value, but it's also giving you that MSRP, which is going to be the resale value if you were to sell it on your own, is what I like to tell people. So if you were going to go out and put an ad, or you want to put your car on Craigslist, you want to know what that MSRP is, because that's what you want to sell it for. When you go in and you have a car to trade in, when you're on Kelley Blue Book, you can put in trade, because that is what the dealer would look to provide you. If you're going to turn your car in, they would not be looking to provide you with the MSRP. And that helps you, because a lot of times people will go online and be like, well, my car is worth $5,000 if I sell it. But so for whatever reason, the dealer only wants to give you 1,500. It's really important that you know that, so then you don't have, you're not shocked. And then you can know exactly what that might look like. One of the little strategies I used to like to give my members is that if you know that your car is worth more, you could take it to a place like CarMax, and they actually buy your car from you. So you would get the MSRP versus if you were to trade it in. So sometimes what people would do is they would go in to CarMax, find out how much their car was worth via if they sold it to CarMax, and then when they would shop around, they would take that with them to the dealer. Now it's up to the dealer if they want to negotiate, but that was just a tool that members could use so that they could have more empowerment. And then when you're in this process, let's say when you're financing, you're doing a private party, you're going to want to know what that DMV process looks like. And that'll be very helpful for you to be able to have that information, make sure you have like all of the paperwork is up to date. If you have to have a smog check, that is all very important information for you to know. And then whatever those costs are, that you can incorporate that when you're in the process of doing your financing. And then Carfax. A lot of times we don't have that car history on hand. The Carfax helps to fill in the gaps. Like, how many owners has it had? Did it have any accidents? A lot of information that you don't get to see because you're just seeing the picture of the car and the sticker price, and you're like, yeah, that's my car. But the Carfax helps you to dig a little bit deeper and give you just more context on your vehicle. And then in conjunction with the research that we're doing on our actual car, the additional warranties or insurance services that are extended through both the dealer and your financial institution. So just like University Credit Union and your local dealer, they're going to have extended warranties. So we have the extended warranties, but the dealer is going to have not only extended warranty, but a service warranty. And so a service warranty looks a little bit different because that takes care of like maybe oil changes, brakes, like your everyday wear and tear. And if you're a girl like me or a person like me, and you're just trying to make sure that that isn't something that you have to think about, maybe adding it into the cost, because all of a sudden in a few months, maybe you weren't thinking about that oil change, and then you got European engineering and it costs a little bit more than if you had a different type of vehicle. So gap insurance and the debt protection. So these are all additional services that you can add on within your financing, but it also adds peace of mind. So I would say out of all four of these, I've had three, right? Like I have had the extended warranty, I have had the gap insurance, and somewhat of the debt protection. And the intention behind the gap was, I one time I had we had a really bad accident, and we literally had recently bought the car, and then we were still responsible for that amount. Now the car was worth a good amount, so it kind of took care of it. But I knew what would happen if we didn't have that. But if we didn't have that extended to us, then we would be put in a space where we don't have the car and we still have to pay a portion for it. Like, and to me, that's the reason why gap and different service warranties are so important, because it adds that peace of mind and reducing some of that heaviness in that's connected to this new financial responsibility. And then the debt protection, which is fairly a newer type of a coverage, at least in my tenure, but it cancels and reduces the balance in case of like death, disability, or job loss. So it helps to make sure that you aren't responsible during those times, right? So um, these are warranties that you can pick and choose. You can do the full Monty, but it really, depending on where you're at, what is going to provide you with peace of mind. And you can always go into that with Coley or myself, or the financial institution or the dealership that you end up working with.
Thank you, Sheena. Yeah, the protections and warranties are an added cost, and I think the knee-jerk reaction is to kind of, say no right away, and then maybe you think about it later, but they are really important, and we have some experience here at University Credit Union with what can happen if you're not protected. So I really, really encourage everybody to shop around for those as well. So don't just take what the dealer has to offer you. Check with your credit union, check with us, check with your financial institution to see if they offer something that's similar. And you'd be surprised at maybe the cost savings that you have there. So Sheena has her car. Sheena has her protections picked out. She's got her gap insurance. Sheena has her interior red, customized car being delivered. And so it's time to finalize the process. So after doing all that, it's going to be time to just, finalize that loan. Like I said, you're going to tell your lender what the car is by providing some documentation, and that's going to help them pull the trigger. And so if you are doing a dealer purchase, if you're doing a private party purchase from a person, maybe you found a car on Craigslist, or you're doing a lease buyout where, like Sheena mentioned before, you have the option at the end of your lease term to go ahead and buy that car most of the time. So in the dealership case, you're going to want to provide, again, your proof of insurance. So maybe you've actually added the car to your insurance, or you just have insurance that you need to give the financial institution proof of. Have that handy, and then you're going to give them the purchase agreement. So you're going to get this big long slip from the dealer. It's going to have the final price out the door. It's going to have taxes and fees and everything included on there. We're going to use that to know how much to pay the car at the dealer for, and then it's also going to help us with the title work. So most of the time, you won't have to do anything as far as title work. You won't have to go to the DMV, just your financial institution and the dealer take care of it for you. So that's really nice, especially if you go with Autoland, for example, because they negotiate the price. They work with us on the back end for financing once you're pre-approved, and then they deliver the car for you. So it couldn't be easier. And then private party. So private party is a little different. We hopefully have a private party owner with a clear title who can present that physically. If that's not the case, you want to make sure to get a current registration. So the current registration will have the lien holder listed on it. So for example, if you decided you're going to buy a car from a UCU member, they provide the registration. It says UCU on the registration. We'll use that to go ahead then and perfect the title, taking our name off of it when the loan is paid off, so it can be titled in your name. In that event, sometimes you do have to do a little bit of legwork by going to the DMV, but a lot of the time we're able to save you from that as well. So just make sure you understand that process for your specific situation. And finally, a lease buyout, which I've been seeing a lot more of these lately. I feel like it never used to be so prevalent, but I think people are just trying to save money and they're realizing the value of having equity in your vehicle, if that makes sense for you. And so you're going to want to just bring the lease buyout agreement. It's going to be very similar to the purchase agreement at the dealership. You're probably getting it from a dealership, and then it's going to let us know how much we need to cut a check for to pay off the dealer so you can take ownership of that car. And so from that point, we are going to start talking about refinancing. And so first, I just want to thank you guys for sticking in there with me. I'm going to check the Q&A and see if there's any question that I can knock out quickly before we move on to the next topic. Let's see here. I think a lot of this stuff we can go ahead and check on at the end. So I'm going to go ahead and move on to the refinancing portion, and I'm going to let Sheena start.
So refinancing. So I know a number one question is, well, what is refinancing? So refinancing is it revolves in, so you're going to replace your current loan with a new one. And this typically means that you're changing the term, you might be changing the rate, you may be changing names. So the new loan that you take out with either your same financial institution or a different one will replace the old one. And then once that is completed, then you will resume your payments with your new loan. So that is pretty much refinancing. So if you're just like, I'm financing, but I'm redoing it, that's exactly what you're going to do. And you're just kind of, it's giving you the opportunity to make adjustments based on where you're at.
The makeover, right, Sheena?
Extreme.
Now, when I get into this with people, sometimes they're really surprised by some of the reasons people refinance because in your mind, you refinance to get a lower rate, and that is the truth. So, currently, we have been seeing rates trending down, and that is good news for people who are in that borrowing phase of their life. And so, if you have a high interest rate and you think you can get a lower rate, that's a great time to refinance. Now, it can reduce monthly payments when your interest goes down. The other way that we can reduce monthly payments is actually by extending the loan term. So say that you have a 24-month loan, but your car value and all of the parameters would actually put you in line to get a 36 or a 48 month. Some people will do that if there's something that's happened and they need that wiggle room in their budget. You want to pay attention to the fact that you are going to be paying more interest then over the life of that loan, but there is no prepayment penalty at University Credit Union. In fact, we encourage it. And many of the financial institutions out there do not have prepayment penalties anymore. So that's going to be one thing to clarify when you are talking about extending your loan term to lower the monthly payments. Just know what you're getting into. Feel free to bring it to us. We're always here to evaluate things that you find at other financial institutions as well. You don't have to be a member to consult with us, and we just want to see you in the best position possible. So like I said before, extending that loan term, that'll result in that reduced payment. Some people will actually refinance at a lower term, either because they want discipline. They may have thought they're going to make extra payments on their own, but that's just not happening. They spend too much time on TikTok like Sheena, and they find something to buy. But that is something that you can do. The other thing is if you're going to remove a cosigner, say that you took advantage of our first time auto program here at University Credit Union, you know, you wanted to get your parent off of your loan, that's entirely possible when you refinance. So hopefully those terms are more favorable. But sometimes you just want to have your own loan and you don't want somebody else tied to it who may not be as responsible, or there are a whole slew of other reasons that could be the case. But you won't be able to remove a signer without refinancing first, or at least never at an institution I've ever heard of. The other thing that people might do is instead of opting for an auto loan, for example, they may opt to buy their car with their home equity line of credit or some other line of credit. Now they want to switch from a variable rate where they can have fluctuations and they're not sure what rate they're going to be paying over the whole time that they are paying that loan back. They want to switch that to a fixed term, fixed rate, safe loan, like an auto loan, where they know how long it's going to take them to pay that off and they don't have to worry about interest rate fluctuations. So refinancing is a tool, and it's a tool in more than one way. So the goal here is just to get you thinking, down the road, if you ever experience a situation where, refinancing might be the answer for you, but you wouldn't have otherwise thought of it, that's exactly what we're here to do. All
And then
right.
that's a great transition. You hit the nail on the head, and we're going into when to refinance. So sometimes we don't know like when's the best time. So some of the things that we can take into consideration as far as like life circumstances, maybe our credit score has improved, rates have dropped, the financial situation has changed, your current term is unfavorable. So if your credit has improved, maybe when you first got your car, like Coley said, like I was a first time, I'm a first time auto buyer. So I had that rate and it was a little bit higher, but now not only has this credit line helped me to establish my credit, I have other credit lines and my credit score has gone up. So that's be a great time for me to go in and reapply and see if I'm eligible for a lower rate. Rates have dropped in general. Maybe when I established my loan, rates were at 8, almost 9%, and now they're steadily decreasing. And now I want to see if I can take advantage of the rates where they're at right now. Um, Having a financial situation that changed. Maybe when you got your car, you weren't at the job that you're at now, and it looks a little bit different, or vice versa. You're in different space in your life, and you're looking to see if you can change the loan to benefit where you are. So taking a look, and I would also add in one of the types of refinance is you refinance your car, but you do a cash out clear title, and you do a cash out clear title because maybe you're in a your life circumstances have changed and that might meet a need. And what that means is that when you were looking and you're doing all your research with your KBB, you found out what the value was for your car. And then you recognize that maybe I'm in a little bit of a bind, but I didn't want to really use the variable rate on my credit card. So I wanted to take the equity out of my car. You could do a refinance and take some of the equity out of your vehicle and utilize that to assist you in different times of your life. So that just kind of evaluating where am I and what are my needs. And so, if you're looking to also change your terms, maybe you want that longer, a little bit longer so that you can have a lower payment, but maybe you are like Holly said, I'm really want to be disciplined, but also I want to get this done in like 2 years. And I see that the rates have gone down, so I'm willing to make my payments, even though they might be a little bit higher, because my interest rate is lower. So I'm paying less there. And I'm willing to do that. Or maybe I got a little bit of extra money. I had a bonus at work and I want to apply that to the principal. And I want to modify my loan. It really allows you to be empowered with how you want your loan to look. It does not always have to stay the same. But I think that aspect of comfort will allow us just to kind of stay with what we originally had versus a refinance as I just want to do like a reevaluation of where my loan is at. And I want to take control of that and, having the right people and institutions there to assist you with making that determination.
Perfect. Well said, Sheena. Now we've got all that done. So we've done our research, we picked our lender. We're going to go through as a process of applying. So I've done a step by step, and like I mentioned in the beginning of the slideshow, a lot of the steps are the same when it comes to the financing and the application. So I just wanted to break it down, and if anybody has any questions on any of the information here, feel free to put it in the Q&A, like I said. But just a quick overview. So we're going to, again, make sure that we prep our credit. So we're going to make sure that our credit score looks great and our reporting history looks perfect and everything's in line. So we're going to get ourselves a good rate. And then you're going to gather the loan details. So say that we're refinancing from another financial institution because we offered a better rate. You're going to want to bring in your statement. And then if you can find your original documents, but it's not necessary. Essentially, we will determine what the the term and the rate and the payment will be, and then we will use that statement to go ahead and pay the lender once the loan is funded or closed, are some of the terms that you're going to hear. And then shop around for lenders. I also mentioned that we give unbiased advice. You don't have to be a member. We don't make commissions. We just want to see you in a good spot. So if it makes sense to go with another lender, by all means, we would never tell you not to. But like I said, go ahead and bring that offer to us, and we'll see if there's anything that we can do. And then we're gonna, compare your offers and choose the best one. So that kind of goes hand in hand, and then we're going to apply. So the application process is going to be relatively the same. The only difference is the paperwork that's being provided, right? So the goal is different. We're not purchasing the car, we're paying off another lender, but much of it still functions the same. And then so we'll pay off that old one with a new one, like I said, and then we're going to start making payments on your chosen date. So we certainly let you choose here at University Credit Union. You can actually push out your first payment for up to 90 days, which is a really special feature. But other lenders, if you do decide to go with them, should let you choose to some degree the date of your payment. Make sure that works for you as far as when your payroll or your retirement direct deposit comes in, and just make sure that's a comfortable date for you. And so what I'll do here is I'll kind of pause. I'm going to put up this QR code to invite you guys to schedule appointments with us if you ever want to. You can take a picture or a screenshot and save it for a rainy day. When you make your next financial move, Sheena and I clearly love to talk about this stuff, and I'd be happy to run projections for you all day. We've got some really powerful financial wellness tools on our website. There are short videos about auto lending. There's some other good resources and how-tos. I really encourage you to take a look. We also will put this presentation on our YouTube channel, and we have lots of them there already. So go ahead and take a look through the library, and if you ever need to come back to it, it's going to be there for you. Cheryl, do we have any questions that haven't been answered in the Q&A?
Thank you, Coley and Sheena. No, I think there are a few more questions coming in, and we are getting them answered. But what
Okay,
we'll do is also post these questions and answers for anybody that may have missed it in the body or in the description of the YouTube video as
perfect.
well, so that everybody is able to see that and gain some additional knowledge from it.
All right. Well, for those of you who feel like sticking around since we've come to an end, I did put together a little special treat at the end of the presentation. So we've got some tips and tricks. These are things that we've heard over the years. Sheena and I have been doing this for a number of years, not to give away our age. But it can be kind of fun too, just to hear what other people have to say and kind of what's out there on the internet and what we've seen work for our members. And so the first one is that go shopping at the end of the month or at the end of the quarter, even at the end of the year, like Sheena mentioned. I think that's pretty common knowledge at this point that dealers do have to clear out old year-end models. They maybe have too much inventory of something and they would like to get rid of that inventory. So that's always my favorite tip is if you can hold your horses and just visit the dealer when it makes the most sense for you financially. The second one is the out of the door price method. So when you're talking to the dealer, most dealers are honest. They're not going to do a bait and switch on you. But if you're having a tough time getting straight answers on the price, just ask for the out the door price. So once you have that out the door price, you don't have to worry about anything being added on, and then you're going to see that on the purchase order. So they're going to have to honor what they said on the purchase order, or the deal's off. Don't be afraid to take your time. Honestly, the more time you take, probably the better off you're going to be at the end of your purchase. Let's see, what do I have next? So check for hidden incentives. So yes, go look at the manufacturer website. Don't just stop at the dealer. See if there are any incentives or rebates, things that the dealer may be absorbing themselves, but that you find out and want to see if you can benefit as well. And then get pre-approved financing, which we've discussed that. So yes, going in with a pre-approval gives you leverage. They're not trying to sell you financing at that point. They're trying to sell you a car. And so there's less to negotiate and less kind of red tape that you need to get through. And then always use online pricing tools because they're so powerful now that they know what other people in your area have spent on that same car, and it will tell you if it's a good deal, a bad deal. You can compare, like Sheena said, we've got tons of resources out there. If you're not shopping the price of your car, you could literally be just throwing thousands of dollars into a hole. So go ahead and do your research. It's very important. And then don't mention the trade-in too early. So this is a method that people use to see if they can get a good deal on the car first, and then they will bring up their trade-in. So that doesn't change the cost of the car. It only enhances their ability to pay for the vehicle. And then you have bargaining power because they want to sell this car. You've already almost agreed to the sale. Now they need to give you a good price for your vehicle. Sheena mentioned before that some dealers will buy your car outright. This gives you leverage if you go get it appraised at different places, AutoMax or what have you, Carvana, and then they offer you a trade-in. Make sure that they at least offer you what that highest trade-in value was. So we're going to look for demo or loaner vehicles. This is another method where they may not have them advertised, but if it's at a point in the month that they want to make their sales numbers, or they're going to be more likely to let something like that go, it's as good as pre-owned, with a certification. So they've been taking good care of that vehicle. The maintenance is up to date, but it's been driven under 5,000 miles, and sometimes those are eligible for, full new car warranties or rebates, things of that nature. So that might take a little research, but if you've got the time and the will, you can do it. And then we're going to go ahead and ask for free add-ons. So after you already have the out the door price, you're like, well, I don't know, I still am not sure. You can ask for anything else that they may be able to add on as a perk. So free oil changes for a certain period of time, or you name it. The ball's kind of in your court at that point. And then we're going to use a temporary email and phone number. A lot of people do not like going shopping because they more often than not ask for the email and phone number, and they just get all of these spam calls or emails. Maybe they don't ask if the dealership sells their information. They might start getting solicitation emails or calls from elsewhere. So that's one method that you can use, is just have Coley's buying a car at gmail.com, or just a burner email that you don't have to keep checking, but you can use for spam of that nature. And then the final one is inspect the car in daylight. So, you're going shopping for a car, you're going to go after work, you just got off, it's dusk. You might not be able to see any imperfections, and it can cause buyer's remorse. So, our whole goal here is to avoid buyer's remorse. And we want you to be happy, fun, free, blasting your music, windows down, red interior, right, Sheena? Just not a care in the world. But
Safely recording your TikToks. I'm just kidding. Yeah.
yes.
You know what? I wanted to for the asking for the add-ons also, because we have on there like the oil changes, but also feel free to utilize your quotes somewhere else as a bargaining tool there. I've had many people who were like, well, I got this quote and I told them I had it, and because I had it from you, they ended up adding it in at no extra, right? So they reduced the cost of the car to add the service warranty or the extended warranty because they wanted them to, get the car there. Like, there's so many ways that you really can utilize that information to serve your best interest. And so we just want to make sure that you guys have all of those resources. You have your toolbox full when you go out and you start shopping around.
Perfect. Perfect ending. You guys, thank you again for joining us. It was our pleasure. We love doing things like this. We love talking about auto loans. If you've got any questions on auto loans or anything else under the sun, please scan that code and make an appointment with us. I'll leave that up here for just a second, and then I'll go back to the first page where we had our emails listed. You could feel free to email us directly. Right. Thank you, Sheena. It was fun.
Thank you, Coley. Thank you, everyone, for attending. Thank you for your questions in the chat. Thank you to our moderators answering the questions in the chat. And we look forward to doing this again.